The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. And I hope you guys are doing well this morning. We're taking a look at the Japanese yen and Russ. We will take a look at crude oil in the scanner in just a second. Maybe it's not updating. We're going to take a look at that for you. Taking a look at the Japanese yen, though, man, scary trade. Talked about this yesterday. Really trying to defend this 133.34 area. I'm not even taking this long right now. Just passing on it. It's the risk reward. I mean, you got to put stops in, of course, on everything you do. But this may do a little bit of a flush here. It's not acting right. The dollar, you guys know what happened yesterday. And good morning to everyone in the den. Thanks for coming. The interest rate situation yesterday, the market's drunk again on, it's hard to believe, how many times they've teed this thing up and just said, you know what, hey, we're going to wait and see. So, this is nothing new to you guys who have been watching the markets for a while. It's always a bias towards them doing nothing. The market loves that type of talk. Quarter point's going to completely pull the rug out from under every equity in the world, I guess. And when they don't do it, everybody has a little bit of a relief party. So that's the situation on the markets. We're going to take a look at the S&Ps. We're going to take a look at the dollar in a second. I just wanted to point out this yen trade. Should be really wanting to get away from this inflection point. This one, I'm just kind of sitting tight, and if it rallies 1,000 pips off of here, I'm going to be somewhat upset. But kind of feeling like we want to just kind of lower high crowd into this and then just take everybody out on the long side. So that's the situation on the yen. British pound, I'm a little bit bigger fan of being long this around some of these inflection points on the bottom. Not as crazy southward looking as the yen here, but again, you got to put stops in. You got a new profile trying to appear on the daily down below here. That's going to be a little bit of a supportive measure. I don't know why that just popped up. Sorry, guys. Everybody's seen my charts, I hope. Okay. The Aussie dollar, I've been a huge fan of this. This is just, let's just talk about what do you do with this now. So we're meeting some inflection points up top right now on the Aussie dollar. We kind of caught the bid again. Okay to get back in the water on the long side, 74.78. So we've reached a high today of 76.69 rounded off. The unfair high is 76.89. So gotten pretty close to that neighborhood up there. You got to be willing to take some weight off the Aussie dollar trade. And again, this has been a lot easier situation to deal with than some other trades. And I really fully believe this Aussie dollar is going to pop. I mean, I don't think this is the end of the story on this one. 2 weeks ago we had that go up there and never get a weekly close above. But, today is, what is today? Thursday? Tomorrow we're going to have a close. Obviously, tomorrow's Friday. I feel like Chevy Chase saying that. And tomorrow is Friday. But we've got a chance to close above, and you just have to now kind of wait until that happens. I think this trade is over for a little bit here. If you want to keep a contract or two on, just to kind of, ink just in case. But, there's no harm in taking everything off here and then just waiting for a Friday close and maybe you get that retracement. If you don't get the Friday close above and you actually start diving before then you can be as happy as the people at the party in the equity scene. Yelling has come through again. This is going to end terribly, as we all know. But you know, as a trader, you can't fight it. Canadian dollar, this is the situation here. Staying on the currencies, we're going to have to reference oil in a little bit as we look at this. Let's just do that. Let's look at the dollar and oil. And Russ is the person in the den who's asked about oil in the scanner, I believe. So I'm going to take a look at that on break, and I apologize, Russ. We'll get it straightened out. Here's the November oil, kind of, you know, getting a little bit of a happy feet here. I talked about oil, you know, kind of being somewhat non-directional here. And we're just smack dab in the middle of a fair auction on the weekly. Here's the weekly, and we're kind of approaching that POC again of a relatively wide profile, so you got to pay attention to it. That's at 46.39, and Canadian dollars becoming a little more valued because oil's popping up a little bit. That relationship Larry Pesavento talks about all the time is very true. So keep that in mind. And here's the S&Ps with the euphoria of they're not going to cave in the entire U.S. economy by raising a quarter point. You remember back in the day, I mean, like 50 basis points, like in an afternoon unannounced, seems like it used to happen all the time. I mean, like, you know, there was never this preparedness, fear, oh my God, let's not upset anything. And let's day trade the latest reports from the, or not day trade them, let's just block out the short side. I mean, this is nuts. Where were the volatility days when Greenspan would just say something weird and then one afternoon raise or lower interest rates on the spot, unannounced? Where are those days? Anyway, so the S&Ps, we you know, that type of announcement, there's no way the market can stay contained. So again, we've closed above 2049.75. We kind of come back this morning, kind of retest at 2152, that neighborhood. Now we're off to the races again. So what do you do with this? Exactly. Somebody's saying in the den, rate hikes all the time when money had value. Yeah, I mean, this is bizarro world. But as a trader, you can't overthink it. I mean, I go back to Rick Santelli. Smart one, just a super logical dude. I don't know how else to coin it, but you know, so a lot of the things he says, extremely logical. They make a ton of sense, but you know, these markets don't exactly go with the sense side of the fence, and you always have to remember that. I mean, like as a trader, we'll talk about this when we get back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And JB, we're fixing oil right now. That, E-Signal kind of hung on to that continuous contract for a while, so apologize for that. So I got some tech guys fixing right now. We're going to just continue to look at this currency situation a little bit longer until that's fixed. I'm sorry, we're going to look at the currency server for a little bit here. Let me get the dollar straightened out here. This is a machine we don't use this for everything here. Here we go. Yeah, and what I was saying about Rick Santelli before, this is the dollar situation. Here's your big support, 94.91. I mean, I don't see, and that's kind of in the neighborhood of 94.78.79 on the daily here, on the December futures for the dollar. This is kind of it wasn't totally out of the blue what they did, but I don't think the dollar is going to suffer too much here. Thanks, Michael, for updating that oil trade here, or the oil screen. But we're talking about Rick and trying to make too much sense of the logical side of where instruments should be based on logic. I learned a long time ago you can't do that, and that's why a lot of times technicals in my mind are at least 75-85% of the equation, because the fundamentals, it's very difficult to time fundamentals, except reports that are pinpointed to a time and a date that are coming out. You have to kind of be aware of those, like yesterday. But poor Jimmy Rogers and Rick and other folks who have tried to make sense of this this interest rate scene. You get taken out in a body bag if you try to make too much sense out of these things sometimes. And technically, it is what it is. That's where the buyers and sellers have determined the price. That's it. That's the big part of the equation. So let me pull up our futures terminal again. If I can get it up. go. All right, so the S&Ps we covered a little bit, but I want to kind of further this. I mean, what do you do with this moving forward? The breadth has changed a little bit in the scanner. We've kind of crossed the border on this POC at around 2158. That's kind of if that can, I'm actually not. I'm not trading the S&Ps right now. I tried a couple of things before the FOMC announcement, kind of held strong at that 42.49 area, and now we're kind of crossing the border on 21.58. And I'm not always blocking out the short side. Sometimes you got to, not blocking out the long side. You just have to try to trade the odds and the probabilities. And right now, I'm just waiting for a weekly close at this stage. And the market, again, seems to like the fundamental news of rates not going higher a quarter point. Insane. Beans, we're going to hit this really quick. Let's see here. Okay. This is what I was hoping for this morning. I was hoping for a reversal, and then I was hoping that we could kind of go back and retest the kind of key reversal situation off of the profile. So this November bean trade, this morning we've rallied back up into 982.5, 983. The unfair high is 983. And this reversal is kind of cool. So I'm looking at this as a nice little lid for this thing to drift down again. So again, here's the initial trade. I actually got stopped out of this trying to trade it again. But then now, it's okay to get back in the water. I feel like I have some semblance of sanity on the short side here. So that's the situation on beans. Let's take a look at a couple of the ETFs. We're going to take a look at silver really quick. Obviously, when money's cheap, stuff's got to reprice itself to the dollar. And this silver trade, we've talked about it, has just been, I don't know any other way to put it, but killer. So 1860.61, that's been the floor there. It's been a nice little trade. Kind of raise your stops up on silver. We talked about that yesterday. Here's the 240s, and don't see any reason to get out of it, really. I mean, you can always take some weight off based on, the top of the profiles on the 240. But again, I'm just kind of astounded. It's not showing any signs of relinquishing the strength on the upside. The December gold trade, similar action. Talked about trying to get across the border, 31.33. And when that happened, here's a 60-minute. Obviously, here's the announcement. And we actually got a nice little retest of that area. After the explosion, this is a 60-minute, and I'm referencing that 31.33 area, the POC on the weekly and the daily information. But just to show you the action on the 60-minute, move above, come back and retest. And that little line in the sand, that DMZ, the 1331, 1333s, was kind of nice. That's what needed to happen. And if I show you this is the dailies. There's that 33. But this is where we were kind of like Custer's last stance. Let's try to get long again down here, 1309, 1310, based on those dailies and 240s. Played defense below. Nice little trade. Now, I think you can raise your stops here. Protect. And we could easily now see 1366, 67. Cheap money. And let's take a look at December copper, kind of in the same sense here. Was really cool. This is the close above and go back and retest. We talked about this the other day. We talked about having to have, some kind of close in the balanced area. This is our weekly numbers above 214.05. Close above, go back and retest. That's the powerful trade. And a lot of times there's no reason to chase something. I mean, just kind of let the market come to you. And this was kind of the indication that we really needed. Somebody else can take shots down here and, without the ability to play defense very well. But this is kind of what I'm really interested in, is this scene and then this scene down below here, 214.05. We reached a low this week after last week's close of 213.90. So pretty good neighborhood to be in to initiate a long trade there on copper. I forgot who asked about copper the other week. They're staying hidden. Guys, we're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Yeah, it's disturbing what's going on in Charlotte. Whatever happened to due process, I have no idea. I mean, the chief of police, I think he's got the facts in order, and I guess we'll know the real story. But the word is the guy had a gun and had a criminal history a mile long, and policemen have to make judgment calls. XLU, we're going to take a look at this one. The thirst for yield may be back on for a little while. Exactly, Tucker. The thirst for yield may be kind of enacted again, and you never, again, these things violently happen after the announcement, but it's, if you're sitting in front of your screen and the volatility just picks up and the train's leaving and all that, a lot of times, these things will have volatility both ways, and there's no free trades out there. So you just got to be aware, even if you got your fingers on the button trying to trade an announcement right after the fact, it can be a harrowing experience. But I mean, the XLU might have a little bit more follow through here. So keep your eye on this one. It was kind of a nice breakage of action before this happened yesterday, kind of close above, go back and retest. That was kind of similar to that copper trade we just looked at in a sense, and the gold trade really. So again, these are kind of the powerful situations that I like to pay attention to, the go back and retest type situations. Staples. Don't know if this is going to be the group to hang your hat on right now. I was considering that the market, it might be a defensive play. Let's take a look at international paper. This is one that I still think is a nice situation. This 47.70 gave us a nice little trade right off the scanner the other day. But let's just see. Yeah, I mean, I still like this from the long side on the long, ultra long term with stops below 47.70. XLE, getting some legs here. 922 is today's date. This is today's price, 69.08. So we're kind of bumping back up into that 69.03. Has kind of been the relative strength trade against crude oil in general, but we're coming up into some resistance right now. That 69.03 neighborhood, printing 69.08 this morning. Oil's trading up, obviously. Let's take a look at the healthcare sector. Let's see, is that a real print? If it is, 73.21. So trading a little bit higher. This is a sector that's just kind of been sick. I think you have better places to put mental capital and physical capital to work than the XLV right now. Let's take a look at Gilead really quick. This is a trade that really, again, we've got the daily close above. And I was hoping that we could kind of leverage shorts off this 78.84. But again, that's what stops are for. So when we get a daily close above and spin around up here, that's, kind of concerning to say the least for the short side. So again, this is kind of what stops are for. We try to show trades that we've talked about that did work out and didn't work out. Let's go back to the futures section and see if we got November crude up here. Yes. Sorry about that, JB. Or Russ, excuse me. Weekly still hanging on. I mean, these breaths have obviously flipped over here. We're going to go into the ETF section. We're going to take a look at the daily ranking system. The staples. This is another reason why I was taking a look at the staples saying, was kind of happy about it before, but now not exactly thrilled about trying to catch a bid on the staples section. It's the only sector where the breadth is negative on 2 time frames here, our intermediate and long term. So I want to go into the energy sector, excuse me. Murphy Oil, I think it's MRO, hold on. Yeah. These prints this morning. Yeah. Murphy Oil up a little bit here. This is, well, we talked about this. Let me just blow this up. We talked about this one the other day, kind of coming down, in a protracted uptrend, profiles edging higher. kind of fighting the oil situation. This is our weekly, and coming down into these 13, we talked about it maybe even yesterday or the day before, 1378, trying to catch a bid down there on the weekly unfair lows, just like we've caught there. You know, we've caught some decent trades off Murphy Oil before. And where are we at this morning? Let me check it on e-signal. We can't give out prices in that little puppy. Looks like we're trading 1488 this morning. So here's the e-signal charts. There's that unfair low, but a little bit nicer visually than the ones in the scanner. So 1488 up in this general area. Or no, wait a minute. Yeah, 1488. So just letting you know a trade that actually did work out that we talked about. Here we go. Let's take a look at a couple other oil stocks. With oil rallying, sometimes you want to, kind of take a look at some things that haven't cooperated. Transocean, let's take a look at this one. Yeah, this is 968. If you can get back up to there, you should take your profits if you tried to pick a bottom here. But that would be a decent selling point. I don't think oil's going to continue to rally. The news yesterday kind of lifted everything. ExxonMobil, we've talked about this one. This is, man, this is ugly. So what I would do on ExxonMobil is, things stay in a downtrend until they're kind of, technically broken. So you got a resistance area around 84.26 on the 240s here. Let's see here. Let's see where we're trading this morning. Looks like a real print, 83.95. So let's see. Yeah, we're getting close up here to the top of these 240s. It's 240 unfair high, 84.25. So, still not a fan of trying to pick a bottom on ExxonMobil until we get some more information on the long term here. This is our daily. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. And we had a caller on earlier, and maybe I didn't see the note on it. Jim from Dallas, Nike, wanted me to take a look at this. Jim, apologize. We're going to talk about this right now. NKE, this is something I don't like how this is acted. I guess the question is it time to buy it? I'd like to see. If you're thinking about buying it, it would be nice to see it close above 55.73. Start looking at it alongside. You got support at 52.33, way down there, and it'd be nice to see it get on the other side of that top of the mountain on the weekly. Jim, are you there?
Yeah, I'm here.
How are you?
Good. Oh yeah, because their earnings come out on Tuesday, and they've had 2 stocks, but then there's a lot of gaps, and it looks like a butterfly setting up if you follow those patterns. So I was wondering, you think it's going to keep on going down because of the dollar, the differences in the dollar and currencies?
Well, if you're unsure of what's going to happen, it's never a bad idea just to lighten up. It makes it, I sleep a little bit better when I don't have a ton of risk on. And then I think a little bit clearer the next day, if you know what I mean. I don't know if you're in that situation, but sometimes it just feels good to get out of some shares, And
well, I haven't bought it yet. I'm just
okay.
It's in a long-term downtrend anyway. If you look for the past year,
right?
I'm saying, do you think they're finally going to come clean and say their earnings aren't good?
Well, you never know what's going to happen on those type of deals, but you're right. On a relative strength basis, it has not done extremely well relative to the market. This past year.
The Dow component, though, right? So
yeah. This doesn't have a massive beta, but are you thinking about rolling the dice before the earnings announcement?
Yeah, I was thinking just for a pop, because it seems like Red Hat came out with earnings last night. Everything's popping. They all gapping up. So it's that kind of earnings season. It looks like to me they're just going to keep on gapping everything up until the party ends in October 19th. Yeah,
if you're thinking about doing something like that, I just wouldn't. I wouldn't go too heavy. Listen.
No.
Yeah, part of your portfolio should have some kind of risk involved with it, and you've got the right fundamental logic going on in your head, what you just stated. Technically, I think that if people were anticipating something like that, it seems like it would be kind of climbing a little bit based on your logic, though, and the stock just seems like it's kind of dead.
Well, today's their shareholder meeting too. It seems like it is popping a little today. Like yesterday was a bottom, like a hammer came a little or something like that. I don't know.
Yeah, a little bit, but it's just coming back up into those kind of daily lows, really top of the range of what it's been doing. But technically, I don't like it yet.
No.
Sometimes it, my kind of theories are just kind of not trade the earnings announcements. But I think, you got some logic. This sounds pretty good on this one, as far as relative to the other things that are going on. But technically, I don't actually like it yet. Good.
You think Hillary's going to be wearing Nikes? She has for the last 2 hours. She might not make it the whole 2 hours.
Man, she looked pretty sad that one day they caught her on camera, and I was talking about she must be as heavy as a sack of potatoes. It didn't seem like anybody could even hold her up that day.
Yeah, well, she had chains and shackles on her. I think she's under house arrest.
Got it. I'm with you on that one, man.
All right. Have a good one.
Hey, I used to live in Dallas. How's the is that airport area becoming kind of more of a populated area out that way at DFW?
Oh yeah.
Really?
Yeah, they're building it like crazy. Yep.
Wow. Okay. I used to live up north on the tollway. Thanks for calling in, man.
All right. Thank you, sir. Bye.
All right. Bye. Okay. I've lived everywhere. That's true. Okay, so we got Nike out of the way. Let's take a look at Apple. This morning, real prints 114.10, so up a little bit. Can't trade it up here. Just nothing to hang on to, long or short. Take a look at Procter & Gamble. Big time volatility yesterday. Ooh. This morning, printing about 88. So here's your Procter & Gamble long-term weekly situation. I've kind of been a fan of this stock. Every time it comes down to support, we reached a little bit of a target up there at 88, 87. That's some really serious volatility yesterday in the stock, and I like how it's closed, so I'm still loving this stock from the long side. I don't see anything like we talked about before when we were talking about Procter & Gamble. I mean, it's kind of like you can look at it from the long side a couple of different ways: relative strength way, protection way, thirst for yield way, blah blah blah. So I still love this stock, and I like how it acted. It's not going to keep you on the edge of your seat, though. Let's see how Facebook acted. Oh, lo and behold, it went up. 130.35. Now we're trading above 129.53. So that's your new kind of stops on Facebook, right there. It is what it is. I think Zuckerberg is giving away $3 billion. That's how concerned he is about cash. That's a lot of money. You should just give it to these people and say, look, I will pay a ransom to you terrorists out there like the people in Charlotte if you just sit on the sidelines and do nothing. How about that? That'd be a good use of money. Pay terrorists. Here we go. American Express, 62.90. Still, don't like this stock, actually. Had a little bit of a trade and bounce down here, 62.90. Obviously in the XLF, and having a rough time here on the dailies here. So I like this thing, actually. I like the way this thing's acting on the short side, and I think we actually could see 62.90 and lower. Good idea, Mr. Rhodes. Netflix finally got down, dived below the 96.18. That's the lid on it. That's the hopeful retest of that number, and then I think we can sail to 88.35. Something's wrong with this thing. We're trading 95.55 pre-market right now. So I would love to see this thing just kind of edge up into 96.18 and then whack it and trade this thing down. Talked about not being able to short this until we got below those borders, and the dream is here. I'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Here we go. There's 4 stocks that are in the breakdown category in the scanner out of the S&Ps and the NASDAQ. Netflix is one of them. So there you go. Breaking down the daily, across the board on the weekly. Nice deal. Talking about those people, those crazy people in Charlotte. You know, it seemingly, not too long ago, the news just kind of bypassed stupid people. But like stupid people now are, people want to watch stupid people. I don't know. It's just crazy. So then that kind of feeds this. I mean, i.e. the Kardashians, man. Those are minutes that you will never get back watching stupid people. How in the world did that thing get popular? But you know what I'm trying to say. These people get on TV and they're the new actors. They should just, the CNNs of the world should just focus on something important. ABC got a weekly close on the last week, and then we're kind of rattling around down here below these profiles. These are stocks you probably, on a day like yesterday, should probably be thinking about not putting in your long portfolio. Here's CarMax. Talked about this one looking sick. Had that close last week below, kind of retested. On KMX. MNK. Let's take a look at this one. Yeah, there's something wrong with these 4 stocks on a day like yesterday. Now, a couple of things we haven't mentioned in a while. Disney, again, I'm looking at stocks below profiles on the weekly and kind of just edging back up into the bottom of their profiles on the daily, just kind of giving that sympathetic. There's Walt Disney. Man, we've talked about this one. There is something left to a day like yesterday. Man, closing below daily. Ooh, something's wrong here. Don't be a hero and try to get long that thing right now. UTX. This is kind of an interesting little situation. You kind of getting back up into an inflection point. Yesterday kind of lifted that thing back up. Into a place where you could whack it again on UTX. You got MKC. Similar situation, really ripe situation here on McCormick and Company. Just breaking down, spinning around below these profiles, 96.73. Scanner just picks these things out. You can really kind of put these in your own portfolio to just kind of monitor how they work moving forward. Here's Coach. Similar situation, below profiles, rallying back up sympathetically to a place where you can just crush it again, put stops above that 36.15 area. We're going to take a look at Kohl's KSS. This is one we looked at from the long side the other day. And why? Nice little bounce on this one. Profiles appearing below price action. Scanner picked this out, getting right down to that inflection point, being able to play defense with a little bit of noise, and then we finally got the pop. Not a big fan of this sector, but I don't think this moves over. You've got targets up top. You can hit 45.48 now. Guys, you've been great. Stay tuned. We'll see you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.